I think we're going to be listening to a whole bunch of Fed speakers here to see, are they in tune with where the market is calling for all these rate cuts? Esther George, clearly not. Here's the second part of the interview we did where I began talking about two things. One is, why are U.S. interest rates so much higher than the rest of the world? And second, what does she think of all this $15, $16 trillion of negative interest rates around the world?
It's incredible, I think. It is part, I think, of an experiment that we're watching to see whether negative interest rates will have the stimulative effect that central banks are looking for.
Could the United States have negative interest rates?
I would never say never. I don't see it for the U.S. right now. Remember, we already have real interest rates at zero right now. If you think about where inflation is and where the current federal funds rate is. So policy is not tight, in my view, in the United States. And I think as the economy grows, I don't see a scenario for that right now.
What kind of signal are you getting from the yield curve being flat and briefly having inverted on the 210?
So we all know what the history is of inverted yield curves and the concern that they portend a recession coming. I think I look at that very carefully to try to understand why are we seeing that. But in the context of a global economy that is weakening, I think that could be explaining part of it. I think the Fed still has a large balance sheet, and that could be putting some downward pressure on those longer-term rates. So I'll keep watching that carefully for sure, but I don't yet see the signal that suggests it's time to get worried about a downturn.
Why are United States interest rates so much higher than, say, Europe, where they're zero?
I think if you look at the underlying performance of those other economies, you will see that the U.S. is performing better than, for example, Europe and other parts of the world, and that accounts for why we have higher interest rates.
So you worry that we're too far above other major developed countries?
I don't tend to think of it that way. I tend to think that those rates in the U.S. are reflecting the underlying economy here. The interest rates in other countries, likewise, are reflecting that. And to address that issue really requires other policies in those countries, whether it's fiscal or monetary, to really affect that growth.